1 minute. Now we can start.
Okay, fine. Okay, so good evening, everyone. On behalf of SIRC, I would like to welcome Shri Satyanarayan for accepting our invite today for the Investor Awareness Program. Investor Awareness Program is something which, even though it is mandatory and many organizations are conducting this program, I think that from the CA Institute side, what we have been doing is trying to cover it in a more technical aspect, so that more information percolates down both to the professionals and to the general public at large, so that the public are able to imbibe whatever it is that is being shared by the professionals, and the chartered accountants also can disseminate whatever is the information which they are taking away from the experts who are speaking. And today we have Sir who's going to speak to us about the mutual fund industry, which is I think taking off in quite a good way in India. But of course, a person like me will need a lot of convincing to invest quite a bit of my investments in the mutual fund market, because as you know, sir, we are chartered accountants and we are very, very conservative in our approach, and convincing me to invest a part with my money to mutual funds is a little difficult. It's a very small percentage which is in the mutual fund market. And I know that as finance professionals, we are supposed to guide our own clients and the general public as well about the risks and the rewards and how risk averse we are. And depending on the age, there are so many factors which need to be taken into account, which rationally I can accept. But I suppose I'm also an emotional investor. I don't go in too much towards the mutual fund or the equity markets, because I feel that they're too market forces driven. And sometimes, I feel that the negativities in the market cannot be explained. And conservatism, makes me go more towards debt market rather than the mutual fund and the equity markets. So it's really wonderful that you've come to us, at our invitation to come and talk to us about the mutual funds. And I suppose you will be telling us it is a very safe investment avenue, which we can also recommend to our clients, and how our wealth can also be, we read about the exponential growth of wealth of people who have been invested for, say, 20, 25 years. And I'm sure you're going to talk to us about that also. So before I actually hand over the proceedings, I'll do a formal introduction of Sir. Sir is a CFP, that is a financial planning, the certified financial planner from the Financial Planning Standard Board of India, an EGMP from IIM Bangalore, and MCOM and MPhil from Chennai University. And he has 20 plus years of experience in international, domestic, public, and banking companies in operation, compliance, administration, and private banking. And currently, he is a partner in Sri Krishna Capital, which are mutual fund distributors. He was earlier associated with DSP Merrill Lynch, Bank of America, and VP Investments, which is a private banking company. He was also with Edelweiss Capital, and where he was the branch head for Tamil Nadu. He was also with the DG Vaishnav College, which is his alma mater, as a part-time lecturer in the Department of Commerce. Apart from his basic qualifications, he's also attended a lot of training programs in training at ML in London, fraud control or anti-money laundering, iFlex London, anti-money laundering, BMA Bahrain, managerial excellence in Manford Alliance Mumbai, managing family business in ISB Hyderabad, EEP behavioral finance in IIM, and client centricity and negotiation strategy in ISB Hyderabad. And he was also registered with the New York Stock Exchange, NASDAQ, for Series 7, 9, and 10. And he lectures and conducts seminars since 2009, providing his expertise in the form of guest lectures at RBI, Chennai University, and other colleges in Tamil Nadu. He's a member of the alumni of IIM, NISM, AMFI, NISM Series 10B Investment Advisor Level 2, Midras Management Association, and also our own Chartered Accountant Study Circle. So, sir, once again, thanks a lot for accepting our invite and sharing your expertise with us. Welcome, and over to you, sir.
Thank you. Namaste. It's very fortunate to be here in a elite crowd, and it is an honor for me. I'm very happy to be with ICA and SIRC. In the last maybe 10 years, I have taken several IAB program, also the investor, client programs also have conducted for at Tirupati and various places in Chennai and virtual of ICA. In Reserve Bank of India for last 13 years, I'm taking guest lectures there from all levels, maybe addressed at least 10 to 12,000 employees of RBI alone. And addition to that, regularly, whenever I have time, I accept for the colleges to give the investor awareness program in India. Because, after COVID, I can say India, before I used to say Chennai or Tamil Nadu. Now, post-COVID, virtually connected and conducted a lot of classes. And this is the past. To start with it, actually, that whether wealth will give us happiness, that is very important to know. If wealth can give happiness, definitely we have to approach only for wealth, we have to get it. In my personal experience, also with the investors, I'm dealing with them. Wealth is only the number. The first I wanted to mention this before getting deep into any other area. Wealth can give us some back of the mind, some security. We have something so that no need to worry about tomorrow or next year or following 10, 20 years. Definitely it will not give us happiness by learning something. What we are every day I try to learn. I learn from you. Every class I'm learning. And also whatever the knowledge we have, we can share to others. Rigveda says, share the knowledge so that it multiplies. And the second thing, invest in relationship, invest in the knowledge. That's very, very important. So even if we want to have a cup of tea or coffee, better to have with a couple of them, so that instead of having to alone, I don't know whether it will give happiness or not. Personally, I will not be happy when I have coffee alone. So investments also, it will be useful, once it is shared, actually. During the process, wealth and power, or money and power, in a right hand, we can create the best, universe. We can create the best universe. If it is getting into the wrong hand, the wealth, whatever the wealth or power, we have seen whatever happened in last 70, 80, 100 years. So I strongly suggest everyone, even some people, retirement program, they ask me why to create wealth after 60. I tell them, if you have more money, you can do a lot of social service. You can do charity. Even if you don't need, if you are having money, everybody is not ready to give. Very few can ready to give. And you can be part of it. That's I want to mention this first before getting into it. So what is capital market? Capital market is something rocket science. It's not rocket science. As Madam mentioned, it is managing our emotions. That is very, very important. If we are buying a land or gold, we marry to it. We never sell gold or land. Even difficult time, we try to pledge. We never sell them. We literally marry to a asset class because of the faith what we are having in gold and also in the land or apartment. If land and apartment is illiquid, gold is very liquid. Even there is a liquidity, we don't sell. We try to pledge only. That's the reason you can see so many gold lending companies are there to give a loan against gold. We never sell. When auction will happen, but the normal public will not sell the gold. Instead, they go for loan. So once we come into the capital market product, any product, whether it is equity or bonds or equity and bonds to mutual funds, we wanted to see the prices every day. The first information what I want to give you, whenever we invest in any asset class for long term, literally it is a long term. We cannot expect any short-term gains. If we started to enjoy the short-term gain, definitely we will not create wealth at all. That's what 99% history shows. Our research shows, the traders, they don't make money at all. Only 1% they may make money, even they try to lose it. So 99% of the traders, they lose money because they're getting into the emotions, they're getting into the behavior as per the market movements or tip, whatever they are going to get. So we are asking, can you see the presentation?
Yes, sir.
Yes.
So it is really whatever I did for the last 30, 35 years, just I want to share it with you. The financial literacy is very, very important for any profession. As Madam was mentioning, the emotions, the financial literacy is there, that emotions will be slowly coming down. It will come down, and then we will be having the faith in the capital market also. If you're asking me where my assets are there, my assets, I have zero in deposits. I don't have any deposits other than public provident fund. I don't have any fixed deposit with the banks. Everything in capital market, maybe through mutual funds or direct equity. And whatever I'm going to mention here about any company or any mutual funds or any investment product, it's all for education purpose. It is no intention to or to buy, sell or hold, nothing there. It is only for education purpose. Please take that as education purpose only, and also information purpose. Not to carry away anything, because market is very dynamic. Markets, trades with millions of brain. So myself, actually, I lost my dad at the age of 4. I can't pay my school fees. Someone helped me when I was 16 years old. I got 50 rupees from my cousin brother for paying the school fees. That was in my life first and last, taking money from others. So I started to plan. Once we have some plan, the failure will be very, very limited. If we have a plan, assume if I don't have the plan, the rate of failure will be very high compared to the success rate. So everybody can make. I can't pay my school fees. My dream to get into the IIMB. When I came back to India, I was in Gulf for 11 years. I joined heading finance in Merrill Lynch in Bahrain, and left them as a vice president compliance. I want to come back to India to, selfish, 100% selfish reason. India is growing very well, and I want to bring my children to India so that they will grow in India. That is the main purpose. My daughter was 5 years. My son was 2.5 years old. Took the decision to back to India, and dream to study. I want to get into IIM. So in 2004, I applied the first EGMP 1. They started its executive program. My profile was selected. Just I joined there, and after that, I had some few lakh rupee. Within a year, I spent some 8-9 lakh rupee, including my education. So I was thinking, what is happening? The belief will come as the emotion. Immediately, I put it in RBI bond, put some deposits immediately in 2004. So I want to keep something very safe. So that is what it started after coming to India. And after I want to do on my own. But the offers what I got is much better than what I had in Bahrain. So again, I started to work in India, in Edelweiss, and also in Bank of America, Merrill Lynch, as a vice president for the business side, not in the compliance or finance in HR, but completely moved to the business side as a private banker. I was there for just less than 2 years in Merrill Lynch, Bank of America. And 2009, I started on my own. And since 2009, I'm giving lectures also. Nobody is to control me. In American bank, before giving any lecture, I have to take the permission. Before I was a complaint, I have to give the permission for the bankers. Same thing applies to me when I become a banker in India. So if I want to give any lecture, I have to take permission. So since 2009, I'm giving lectures in Reserve Bank of India and also various places. The need and want, need can be, easily sorted out for anyone, not you and me. Anyone need will be fulfilled. Maybe assume the dream in 1993, 94 to have just 1 2-bedroom apartment with 5 lakh rupee. 5 lakh means that time we are getting more than 12% interest rate. So intent to get only 5,000 per month. That was my paycheck, what I was getting from IBP, where I was working in Indo-Burma Petroleum. Now it is Indian Oil Corporation. So I left it and joined Merrill Lynch in Bahrain. So that point of time, I dreamed to have 1 2-bedroom apartment to get some 5 lakh rupee in my deposit. Want to come back to India. So that is like a need. But after achieving that, 5 lakh rupee or 2-bedroom apartment, the wants and desires are increasing every day. It is uncontrollable. It is very difficult to control. So continue to be there for 11 years in Bahrain. Even maybe 5 lakh may become 10 lakh, 10 will become 20, 20 could become 40 lakhs, Let's keep on increasing. And then my daughter's son, they are very small. So wants based on my need and also my family need. That's what happens. So once we can control the wants, we can create, a financial liberation very quickly. Fulfill the need. After fulfilling, save aggressively for next some experience. So automatically, our wealth will be created. The leverage is good if we can manage, but how many people can manage in a good manner? In industry, if we see big companies with a lot of treasury operations and professionals in the big companies, they are unable to manage. Many companies evaporated from the industry. I can give you n number of examples, many companies of the builders, building company, listed companies, Anil Ambani group of companies, maybe like many companies, only because of the leverage evaporated. But what is the opportunity available in India? Even for the last 20 years, world minus India, there is no growth, because India and China will be the bigger share, like a population like, India is 1/6, again China is 1/6, that's 1/3 of the world population is these two countries. So that is the opportunity what we have. Additionally, in India, what the futures, what we talk about children, their education, that's what we build for the ages in the decade. We can say in India, in the Bharatiya culture, we try to give the education to our children that will carry a long way, and which pays us even whatever we lost. Even British looted us, other people invested in looting us. Same things happen, but still we are very strong in the world map only because of the knowledge what we have delivered in India. That's very, very important. So opportunity, you can see, before getting a visa will be difficult. Now world is chasing Indians. The Indian talent is highly in demand. Like 50s, 60s, we exported doctors, 70s, 80s, 90s, IT, and also later nurses in UK, teachers. You can name it, we are there. And again, now that our time has come, in the next 40, 50 years is for India, especially as an investor, I will tell you not to be missed next 20, 25 years. Last 25, 35 years, we have seen so many challenges, not one or two challenges, many challenges we have seen, still we were growing. In the next 20, 25 years, we will be having the phenomenal growth for India. So not to be missed. So very important, people will come and tell you, just come on, let us invest. But we should know the depth of the market. Or before, if I know swimming only, we can swim. Otherwise, we have to be with someone. The same thing applies for any investment. Many people say, I did not make money. What is the reason? Probably they are investing for long term, but they are selling in short term. That is where many people try to lose money, because they came for the market for the long term, but they are in short term in nature. That is what is that exactly means. I am investing in the long term asset for the short term gain, which never happens. Only 1% happens. Rest everyone will lose it. That's very, very important. Balance whatever money you make, end of the day, we have to be happy. Maybe if I make 40, 50 lakhs per annum, if I can't give the happiness at my home, so my 40, 50 lakh is zero use, 100% zero use. So we have to balance with our family, friends, and office, and also wherever we are going. Then automatically we try to do much better than what we were doing. And this, I shared this same thing, take the Savitri for actress. She was highly paid actress in India. When she was dying, she did not have anything in her package. So it is here the information is making money or safeguarding money. That's very important. Boris Becker, we have seen recently was on the trial, and Gemini Studio, SS Vasan, Arkesali house went for auction. Like AK Hangal, Raj Kapoor, Hangal Sholay, the person who took the Sholay, he unable to pay some dues. That was a situation. Some people helped him to pay. Everything is in business paper. You can, all are facts only. So here the message is very loud and clear. It is easy to make money. Maybe during our career, we will make money. Even myself, when I was in Gulf, I was making exceptional money. God is very kind, without asking is giving, even now. But what I was doing, I used to pay some 500-600 dinar per month as a telephone bill. Speaking is like, disease. So I was speaking over the phone with my mother or brother or family, friends, we used to speak over the phone, spend some, 1 month salary. I used to pay telephone charges, and also the air ticket coming to India and going, which gives, happiness that point of time. If I rewind and see, this is all the, maybe I feel enjoyed, but it was an enjoyment with very, very expensive enjoyment. So if we can manage, or if we can avoid the wastages, everybody will become crorepati. I will not ask you to save. Even if we avoid the wastages, we will become a crorepatis. And what is happening in the investment world? This is what happens. So this is what happens in the investment world. Suppose if I want to invest something, am I taking my own research, or am I following the friends or relatives or neighbors or colleagues or something? Most of the occasions, I will tell you, more than 60 to 70% of the occasions, we try to see what is my colleague is doing, what my brother is doing, or my friend is doing, or if he says I will also follow to the same thing. I will never see is it really required. And this is the main reason many of us, we don't create wealth, because somebody is buying for something and immediately I will also wanted to get in. For example, when I was in Madhya Pradesh, somebody from West Bengal is buying something property in West Bengal, Baliganj. But immediately people from Madras, they will say, what are you doing? No, I'm buying from Baliganj, maybe 1 ground of land, because it is very cheap, I'm buying. Immediately Madrasi, myself or my colleague as a Madrasi, he will say, Mero ko bhi le lo. So this is what happens whenever it is coming to the investment. Somebody buys insurance, we also buy it. Somebody buys mutual fund, we also buy. Here the very important message, we have to buy as per our requirement. We have to do our own research. We have to do our own information. We have to get it and then decide, is it really suitable? Even those days, even 40, 50 years before, somebody wanted to buy the land, he will do the enough research and then they will buy. Particular person will go to that particular place and see. Now we want to buy everything through online. That is where the problem. And what I see the challenges for future. So this is recently came in the newspaper on 15th March 2022. The long-term capital gain could be taxed. In many countries, they are taxing at 25 to 30%. Then what is a signal? We did not have the long-term capital gain before 2018. They introduced 10% long-term capital gain. We know the market corrected. And then they said market will be collapsing. We don't make anything out of it. So end of the day, what happens? It will happen. Whatever it has to happen, it will happen. Ignore the noise. First thing what we have to see, whether is it suitable for us. That's what very, very important. If it is suitable, how much we can allocate. Maybe if I have 100 rupee, we have to follow the asset allocation model and we have to see how much we can invest. That is very, very important. You can allocate maybe, within the capital market, how much direct equity, how much ETF gold, or how much in mutual funds equity or bond funds or fixed income products. It varies from person to person for the asset allocation percentages. And the inflation, you can see 12% inflation rate of return in scenario A. Scenario B is 10%, scenario C is 8%. And the inflation 8, 6 and 4, which is good. Can you can chat or somebody can unmute and tell which will be good for this. Whether first A is good, B is good, or C is good. Hello. So I can see Mr. Rinshat is telling B is good. Any other opinion? So we will go back to the left side. You can see that 11%, 13%, 9.8, 10.28, 9.96, and 13%. And we can see the inflation, higher inflation. And 2099, 2000, 2001, 3 and all, it is like a 4% inflation. Again, we are back to above 8% inflation in 7, 8, 9, 10, 11, 12 and all. Again, you can see some 4% inflation. It came back. And which is good. Suppose if you are asking, if you have 100 crore with you, if your expenses are only 50 lakhs, then A is very good, because you are going to spend only 50 lakhs every year out of your assume 10% is the income, and 10 crore you spend only 50 lakhs. So his asset will grow at 12%. But whereas the common man, they make and they spend everything. So if that happens, whatever they are making, inflation is 8%, they will not save anything because of high inflation. They try to spend everything, whatever they get. So if the lower inflation, which is very good for the common man, if the inflation is low, they have something in their hand. Assume maybe the rice was some 20 rupees per kilo in 2007-8. Today, for example, 50 rupees. So inflation is there. But from 19 to 20, 19 to 50, within 1 year it happened. It was like, 2004 I came to India, 4, 5, 6 only at 19 rupee. Suddenly from 8 and 9 it went to 50 rupees, and we are not 60 rupees. So if the inflation is lower for the food and very, very important items, which is very good for the common man, you can see that from the left side, and which period we are having a lower inflation, which period higher inflation. Higher inflation is very good for rich people, and lower inflation is very good for the common man. This is very, very important message, so that, if the inflation is higher and higher, we are going to get the higher interest rate. Some people say higher interest rate is good for us, but higher interest rate, what will happen? Inflation will be higher. We cannot save what we wanted to do. So you can see that rate hike war happened, like a rupee from 74 to 80, and like roughly 10% rupee is depreciated against dollar. And you can see reserves from 500 to 500 back. We were 600 plus billion Indian forex. All these things, negative information will come and go. Is it new to us or there before? People talk about the rupee, because rupee from 81.4 it touched, and immediately they say rupee, dollar and all. But is it new? When I was in Gulf, just before Gulf, it was 17 to dollar. I will show you that chart also. It was 91. That time Narasimha Rao, the toughest period, he has to pledge the gold to safeguard India. That was the situation. We had less than 100 crores, reserves what we had. And he has to pledge the complete gold with the Swiss bank, and then he has to get the loan for the saving India. That was a situation during Narasimha Rao time. So it was around 17 rupee. In 93, it became 31 because he devaluated the rupee, be competitive in the international space. And it is almost like, 80% rupee depreciated immediately. So that time, again, the same thing happened. Is in 91 to 2010 years, 17 become 45. Is it new? We were at 74 at COVID level. We are at 81. But when we see only rupee with Indian perspective, yes, it is depreciated. Let us compare the same thing with the other countries. What happened during this toughest environment? We never seen like, COVID type of situation. We are better than any other country. That is the numbers which is available public data. Whether it will hurt us? Yes, it will hurt in the short run. We maybe 17 become 31. It was hurting us that point of time. And 17 become 31, 31 to 60. During the process, things will settle. Absolutely no need to worry. Ignore the noise. That's what I will tell you. India will grow exponentially. That is my message. India will grow exponentially because of the Make in India program. We will get a lot of opportunity for employment and many things. All those numbers also I will give you. And another dangerous thing, this is the very, very dangerous what you see in the corporate world, what is happening here. I'm not, bad mouthing or something here. As a normal individual, what we need to do, if we away from all these things, we are better off. Like Aadi offer, Poti started Aadi offer because nobody buys during the Aadi Ashada month. That time, Pothis came out, they said Aadi offer, you get 20% discount, 40% discount. You buy one saree, I will give you one saree free, all these things. Even for the saloon, I saw this photograph, I've taken this and I'm putting it here. If his youngsters are making exceptional money, they get, 6 to 10, 12 lakhs rupees they are getting as a starting pay. And their income, it is getting into the wrong hands. Wrong hands in the sense, there is no importance of the saving. Before somebody wanted to something, they wanted to buy for the home, they wanted to buy for the longer duration. They want to buy the land, they want to buy apartment, they want to buy teakwood furniture, they want to buy the best quality utensils, all these things. Now we are buying everything use and throw. Any furnitures, what we buy plywood or much less quality than that. MDF or chipboard. So which will be useful one time, two time, if you just, unwind and rewind, and automatically, you cannot use them at all. And the MRI scan, 7,500, you pay 50% discount. Your family selected for, Lenskart for home eye test for 3. And Byju's, tuitions, you take for example, tuitions are back, they say. I'm not bad mouthing anything. And the tuitions they say from the age of 8 or 9, which is a concern for me. Now people, our most of the normal or common man income, it is even if you have a 2 child, we have to spend some 2 to 3 lakh rupee per annum minimally. So what will happen? 3 lakh will go, even somebody is getting 12 lakh after paying 1 lakh taxes, he is having 11 lakh. 3 lakh will go for education of children, and 4 lakh rupee will go for rental, and the only balance is left out for us. So when they put additionally all these things, even everything will go, and it is a bigger disaster happens. So we have to be very careful what is required. Whatever required only we have to get in. And if we see the change is constant, if we see Dow Jones, now only 4 companies are there in 40 years, like Merck, Procter & Gamble, IBM, and also the GM was there, GM is evaporated. So the change is very, very important. Suppose somebody as an auditor or a chartered accountant, or maybe ourselves professions, even doctors, now through the digitally they are giving the prescriptions. If I say no to the technology, no, I want to do everything for manual only, we will be undated. So we have to accept the change, we have to move on. And we have to invest in the companies where the promoter is very good. They are ethical in nature, they have the corporate governance and a future oriented product. Top line is growing, bottom line is also growing, and also investor friendly. The company should follow the rule of the land. If you feel somewhere something is missing out of this 5 or 6 rule, better to be away from those type of companies. Why many companies are exiting China? You know better than me, because you are signing off the balance sheets of many companies. So we have to be very ethical for everyone. We have to be ethical and we have to be careful. Sanadharma says, be ethical, be ethical. Yes, and now we are understood. We have to be careful also for our livelihood. And like, Dow Jones, Nifty, once upon a time, all these companies were part of the Nifty, like Unitech or JP Associates, Reliance Industries, Satyam Computer, the Satyam Ramalinga Raju, he was the face of BPO. So whatever we say, the business process outsourcing, before Raju, nothing was there like that. He proved in US that I can do in the next room, same thing I can do it in India also. So because of that, it came to India, the BPO we got. And anything can happen to any company, whatever the 50 in Nifty or 30 in Sensex, which will be changed constantly. If they follow that ethical standard, they will be there. Investor will respect, industry will also respect. And Nifty, we know the earnings per share, we calculate for every single company. Here I'm putting it for the Nifty as a 50 companies, what is the earning? Suppose if you see what many industry specialists, they predicted 800 in 2019-20, they predicted India will touch 800 EPS. Yes, we did touch August 22, we were at 800 PE, and we were 400 in 2019. It is almost doubled, I can say. And if the earnings are growing, it will reflect in the share price of the company in the long duration. In short duration, because of various reasons, maybe market will go up or come down. If the earnings are there, automatically we will see a different Nifty numbers or Sensex numbers in the futures. We all know that market is trading only on the future earnings, not on the past earnings. Suppose if you see, for example, next 3 years, we are in 22. In next 3 years, we are going to grow at 10% of our earnings. Our earning from 831, we could be 1106, 1106. Assume same PE is maintained, 21 PE. We will be at 23,000 in 2025. It is hypothetical number with some expectations. Whether do we grow? Suppose if we see 10 years before, 2012, we were at 300. And 2002, we were at 74. We can see even 5 years comparison, 10 years comparison. Yes, we will grow because of the younger generations, because we have 35 and below age is much higher. They are spending, not the people, those who are at 50 or 60, we spend much lesser than the youngsters. So they will drive any economy, whether Indian economy, other economy, they drive. Indian workforce in the world, we are having the highest number of people, those who are below 35, which is really very good for India. and not to be missed. And this is what Motilal predicted in 2020. Motilal also predicted that time we were at 470 and they were telling 870 in 2023. Yes, we are almost closer to that. If you see that actual Nifty, we are at 831. So whatever that prediction almost holds good. Even many people predicted this, not only Motilal as well, just I'm sharing that presentation to you. Many people predicted we were growing at 17% from 1 to 2009, and we are growing at 6% now. And their expectation that we will grow more than 20%, it already happened, and we are growing. And this is a crisis. This Corona crisis, what we have seen, global financial crisis in 2008, India corrected more than 50%, and during the Corona crisis, we corrected 40%. What happened after the Corona? Everybody thought everything is gone. Many people sold their assets. If you can see, before the Corona, we were getting the assets every month, positive cash flow. We are getting into the mutual funds and equity. But post-Corona, they exited for the 13 months. It is consistently negative flow. So this is what happens. The normal investor, they try to invest when markets are growing. The same thing happened during Arshat Mehta time. Same thing happened in the dot-com bust. Same thing happened in the global crisis, financial crisis. They will be putting more money into the system when markets are moving higher. At the same time, they will exit when markets are lower. They don't make money. We have to put money when markets are very cheap. You can see the dot-com, you can see the subprime quantitative easing in 2013. That point of time, government securities corrected 10% in one day. When Subbarao, Reserve Bank of India governor, we are having that deep trouble in the challenging time in the credit markets. He increased margin standing facility from 800 basis points to 200 basis points increased to 10% from 8%. So what happened that day? The government security, 45 minutes not traded, and that day it corrected also more than 8.5%. Even you see any mutual fund, even the gilt funds, it corrected more than 8%. Every fund, whether it is any name, it is corrected. So after correction, after 3 years, if you see, again, it is back to, people making 7-8% in the government securities. So ignore this turbulent negative information, but only information here, not to buy when markets are having exceptional inflow of assets because of the sentiment that will eat away our earning rate in a long run. Suppose somebody bought in 2008, Sensex at 20,000, today we are at 58,000. So somebody bought at 10,000, it is like 6 times. If somebody bought at 20,000, we are at 3 times. So whenever markets are higher, better to be careful. I'm not telling don't invest. I will suggest you to be very careful, not buy aggressively because everybody is buying. Because everybody buys, that means when apartment become 2,000, become 4,000, 4,000 becomes 5,000, everybody bought. And now it is 6,000 everywhere, the same thing. If you take, for example, Chennai apartment or Bombay or Baliganj, when it is 2,000, nobody bought. Only the business people will get in, they can sense it, they will buy. But the normal investor, once it doubles, like gold becomes 700 to 2,000, everybody bought during the subprime. But 2,000 become 3,000, after 3,000 to 3,000, 6 years, no return. People are sitting idle with their gold. So better to buy when nobody is buying or if people are selling. We have to do the reversal. That's very, very important. Here, everything actually, if you see the behavior, as Madam was mentioning, the behavior is very important. The behavior of the intermediary, behavior of the investor, both are very, very important. If the intermediary is also giving wrong signal, investor also asking to buy when markets are higher, then there is no use of keeping the intermediary. So intermediary should have some experience, have some knowledge in that area, approach the specialist if you have doubt. Maybe if your father is an investor, maybe for example, last 20-30 years, he is the best person to share the very ethical knowledge because he is your father. So you should get somebody trusted person for creation of the wealth. But this is what available in the industry, but rest everything is manufactured. Ignore what is coming, like, if before 30th September, if you don't invest, you are going to lose the opportunity. Nothing happened like that. If you see, we have seen so many, controlling steps, we say, before 30th, before 31st March, we have to invest. Ignore all these things, which is no way useful at all. So important information is here. Buy what you want. That is very, very important. If you buy which you don't want, automatically you have to sell what you have, which you wanted to have. Madam was talking about bond also, she was talking. If you are investing in a bond fund, you have to give the same time limit. Suppose if you want to invest in liquid fund, at least you have to be stay there for 15, 20, 30 days. It is not like, one day I will put, second day, maybe you can look for overnight funds. If your period is around 3 months to 1 year, you can look at for low duration or ultra short, because all this average duration is below 1 year. If anything you are looking like a fixed deposit, like a 3 years and all, go for a short-term banking and PSU fund. Banking and PSU means public sector undertaking. Only they invest there, in the bonds, not in equities. So if you see 3, 5, 10 years horizon, they delivered more than 7%. Even if you see last 2 years, they delivered average 3 to 4%. Toughest time in the Indian bond market, like challenging time, especially after ILFS, after DHFL and all. Still during the toughest time, they delivered some 3 to 4.5% return, the short-term and banking and PSU. If a time horizon is much longer, interest rates are going to come down. Assume, for example, interest rates, when it is coming, you have to select the long duration fund so that you will get the benefit. So reason for that, whenever bond prices are falling, interest rates will go up. Whenever interest rates are falling, bond prices will go up, you will get the benefit of it. But now, maybe you can see last 12 months, we have seen interest rates going up. First time they increased 40 basis points, again they invested repo. And I strongly suggest you be only ultra short term, low duration for that maybe 2 to 3 years time horizon, because I feel in next 12 to 18 months, we may see another 100 basis points increase. Whenever the duration is higher, the volatility will be higher. If you are investing like a government security, which is like, 7 to 10 years horizon only, you can invest. Don't invest in government security thinking that, interest rates will fall, I will make best out of it. Why to invest in the bond funds or banking and PSU fund? What is the reason for recommending? Assume you put 5 lakh rupee deposit, 20 years, assume time zone, and 6% your expectations, you are at 30% bracket, you made only 11,30,000 post-tax after 20 years. Assume same thing if you invested in banking and PSU fund or short-term fund or low duration fund or medium-term fund for 20 years. Assume if you are getting same 6%, here the capital gain tax is only 20%, that too after indexation. So indexed cost, assume your inflation is 4%. In last 20 years, inflation is also 6%. The rate of return was 7%. Even if you assume 6%, you paid 0 taxes, you will get the complete 16 lakh as your profit, like nearly 5.5 lakhs is the difference. Assume your inflation is only 4%, your take home will be 15 lakhs, which is 3.5 lakhs more than what you are getting from the bank's fixed deposit. What is the advantage? I will talk about the disadvantage. What is the disadvantage? This is related to the market. Everything is listed in the market. Every day you will see the price. In fixed deposit, you invested for 3 years or 5 years, you will hold it for 5 years. So after 5 years, they will give you the fixed amount, what you invested, 5 lakh rupee. Every quarter, they will give you 6%. Here, nothing like that. Here it is everything traded. If you want the money after 1 year or after 6 months, whatever the market price you get, assume interest rates are going up, that time you may not make 6%, you may make 3%. If interest rates are coming down, when after investments, interest rates came down, instead of 6%, you may make 9% also. I will show you that also. So in a 5 years time horizon, everyone made money. No one lost money in banking and PSU fund. Everyone made much superior return than anything else compared to, very safer asset classes like fixed deposits. So if you see the GDP, US took 10 years to double from 2.6 to 5.2. It took nearly 10 years. And Japan took 8 years from 2.5 to 4.9. And China took just 5 years to double from 2.2 to 5, like 2005 to 2009. But India, our expectation is that from 2019, and we want to build like 2026, 27. I hope it will happen because of all the youngsters, all the whatever the startup program, whatever it is, it will happen. And if you see the market cap during the similar period, America 2x happened from 1980 to 88. The market cap 2x, Japan 1.3x, 87 to 94. And market cap, it become 9x for China from 2005 to 2009. But whereas India 2.5 times, like 18 versus expectation. So if market cap, what is in 2014, we were 100 lakh crore market cap, 2014. And today we are 280 lakh crore in 7+ years. That is 180% appreciation. How many of us got that benefit in last 8 years? Whatever the market gave us the benefit, whether we got those benefits, that is, we have to ask ourselves question, why we are not getting that benefit? Probably we are not part of the investment. We are all saving, but we are not investing. And what gold delivered? 10-gram gold was 1,800. It is in 40 years, it delivered 26 times 52,000 or 50,000 now. And 1981, 2,700 silver, today around 58,000 per kilo. Again, it delivered 40 years, it delivered 25 times. And Sensex 170 in 81, and it is like 58, 57,000. We are at 330 times in 40 years. So if you see, you compare the land, you compare the apartment, you compare any asset class with your own experience, maybe your grandfather experience or your father's experience, your friend's experience, you can compare and see which delivered. And why we are not getting this 300 times available for everyone, but we are not getting, what is the reason? The main reason is the emotions and behavior attached with the asset. The gold, silver, and the land we are holding, but when we are getting to the Sensex or whenever coming to the capital market, we try to check every day, every week, or every hour. That is the main problem. And Rakesh Jhunjhunwala, from 1985 to 1993, 8 years, that 5,000 became 200 crore, exceptional period, 85 to 93. His net worth was 200 crores. But 93 versus 2022, it became 40,000 crore, 200 times. The main message here, making 5,000 to 200 crore, it is definitely beyond everybody's brain. It is unbelievable. But if you see 200 versus 400 crore, even the mutual funds, just I'm naming, it is not for recommendation. If you see, for example, 93, Franklin Blue Chip, if somebody invested 1 crore, today roughly 150 crore. It is 150 times. It is a large cap. If somebody invested in Reliance Growth Fund, now it is Nippon Growth Fund, 1 crore become 200 plus crore. So journey from 93 to 2022, he made his assets 200 times. Even some mutual funds also delivered similar return. Mutual funds, everybody can be part of it. Even they can put 1,000 rupees, they put 5,000 rupees every month. Also 500 is allowed. But are we there? So the message is very clear. I did not see a single investor, somebody invested in mutual funds, holding with diversified equity mutual funds, holding it for 7 to 8 years. No one lost money. Everybody made money. Everybody. But how many people held? Suppose 2008 versus 18, 7 versus 17, 5 versus 15, any 7 years, 10 years period, no one lost money. But only thing we buy when it is market is higher, and we exit also. And I want to play this. This is again another reason. So this is another reason, we want shortcut. We want to make everything very quicker. That is where, we miss the opportunity. That the opportunity, what we miss, if we wait, we make much higher. So that's the reason I showed. That is recently that video came in my WhatsApp. So I felt it is very important. Many of us, we do that actually. We buy something and we want to exit quickly. Because we wanted to reach quickly. Maybe I bought some company at 100 rupee. Maybe when it is 120, 130, I sold. Maybe that company today could be 10,000 rupees or 6,000 rupees. And we wanted to make very quickly. So in the long run, what we enjoy, that we miss. So what the transformation happening in India, organized or unorganized to organized sector, you name the sector, not only food, jewelry or grocery, every single sector I'm talking, even the banking sector, the money lending business, you name the business, even temple, I'm telling temple, even e-arati is there, very famous e-arati. You pay everything, you book, from home you can see the arati. Now, that is what we are fastest growing now in the digital wave, and the size of organized is keep on increasing, where we are 6 to 69, which is not a small thing. Again, the jewelry, like we were at 23%, and we are getting into 42%. Again, which is not a small thing, from 77 unorganized to 58%. So what will happen if everything becoming organized? You and me, both of us will get more business. Everything will be in the bank passbook. Everything through the PAN card happens. Everything through legal business will happen. So automatically India will also grow. Every citizen of India will also grow in front of the world. So not to miss. So organized sector will be keep increasing. Even the doctor's fees, they are telling to pay through the GPay. This is what happening now. And not to be missed. That's the main message what I want to tell you. And IT filers in 2013-14, 3.3 crores, and 17-18, 5.8 crores we had. 21-22 around 6 to 7 crore. Their expectation is 8 crore, around 7 crore it touched. So where we were and where we landed up, 1.85 to 3 crores in very short duration, and it is 6 crore, and we are marching towards 9 crore. It will happen, 9 crore will happen only because of the GST. Assume if the GST was not there, these things will not be there. And I feel the GST, it is giving the pain. Pain means, in our profession, I will tell you, I'm the biggest loser because of the GST, because whatever the commission I'm getting, I have to pay GST. Assume, for example, before the GST, if I received 1 crore income, all 1 crore is my income. Assume if I get the same 1 crore income, I have to pay 15 lakh as the GST. That is 18% I have to pay the GST. Now I pay close to 30 lakh GST. That is from my income. So severely affected. Still, I'm telling you, GST is Tamil Chalradha Varaprasadam for the Indian economy. Indian economy will be very good. Automatically, we grow much, much stronger and faster. And when I came to India in 2004, I was telling, like 22 rupees NAV. You can see 2003 December, this ICICI dynamic plan NAV was 22. In 2002, they started 10 rupee. In 2002 to 2003, it doubled. You can see that 2002 it started, 2003 the NAV was 22 rupees. I was telling them, even 1993 when real estate boom came, from 93 to 2004, real estate prices status quo, like 2010 versus 22, no appreciation. But even that point of time, even the mutual fund industry doubling, tripling in the 10 years also, which we were making money. So 93 versus 2002, which happened, we are making money. So the message here, somebody bought at 2002 October 1 lakh rupees worth of ICICI approved dynamic plan. Again, it's only education purpose today, which is multi-asset. The name changed to multi-asset. In 2009, value was 7 lakh. 1 lakh becomes 7 lakh in 7 years. Suppose somebody bought that asset for 2007 at 92 rupees NAV. The very next year, it corrected nearly 60%. You can see the NAV is 51 rupee. From 92 came down to 51. Suppose somebody afraid they sold, not only one asset class. You can see the Birla Frontline Equity 81 become 41. Asset value 81 become 41. But somebody bought in 2002 at 10 rupee or 1 lakh rupee become 7 lakh rupee. If somebody bought HDFC equity fund, which is a flexi cap, the NAV was 223 in 2007. It corrected 112, almost like a 50% erosion in their NAV. But what happened? People afraid, they sold and they were holding it for 3 months, 6 months. They thought that is a long term. Long term means at least 5-10 years. They were thinking like 1 year it will improve, 1.5 years it will not improve. People started to sell and they exited. Once they exit with the losses, they will not come back to the system at all. Suppose if you are buying a stock at 100 rupee, you sold at 130. Normally, people will not buy above 130. That is what the research says. We want to buy below 130. That will never happen. That's what I've seen. So the same HDFC flexi cap, if you invested in 1995, 1 lakh rupee, which was 19 lakh in 2009, today 100 lakh, more than 100 times. Not only one asset scheme, many schemes I can show you if time permits for me. And equity linked saving schemes. Here the equity linked saving schemes, actually if you see somebody wanted to invest only in fixed deposits, they don't want to participate in the mutual funds. I strongly suggest you, at least for tax saver, you consider mutual funds. Reason for that one, you will also grow. You will grow because you are consuming. Consuming means every product you are consuming, which is most of the companies which is listed and they are making money, they are taking out. Small example, I will give you Gillette. Gillette makes hundreds of crores. If you see 3-4 years profit, more than 300 crores. Majority shareholding held by the Procter and Gamble, they will take away everything. Like Hindustan Unilever, they had 62% promoter holding, they increased it to 67. 10 years almost no return, like ITC 1 year before, 10 years zero return. ITC also the same thing. Hindustan Lever same period at 450, 480 trading, share price not at all moving. That time SEBI said promoter can have up to 75%. So what they did, they increased from 60 to 67. Share prices went to 450, 550, 650, 700. Many retail investors exited below 700 rupees, and today which is 2,500. And if assume 8,000 crore profit made by the Hindustan Unilever, out of 8,000 crore, 67% will go to Unilever. Not only one company, even the banks. If you see the most of the banks are Indian controlled foreign banks. HDFC or ICICI, you name the bank, any private banks, FIIs are keen to invest more in India. So especially the banking space, as per the regulation, even you say Kotak, Uday Kotak is holding 26%. RBI is telling to reduce that holding number of percentages. So what will happen? This shareholding will go to outside us. Once it goes outside us, they will be owning our companies, and we don't get benefit out of it. With Hindustan Unilever product, small example, we are all buying every single product of that. Every day, you name some product, you take shampoo or detergent, it is part of the Unilever. But we are not owning the stock. That means, we are losing that benefit. Understand the risk in the equity. Even if you are not owning the stock, invest through mutual fund. Mutual fund is safer and better. Everything is subject to market risk. Initially, while introducing, they were telling because of the risk, we are not into the mutual funds or equity. I did not see a single product. There is no risk. Every product is subject to market risk. Even if we are investing in education, that is subject to market risk. We don't know the outcome. First thing, we don't know outcome. Maybe at the age of 1, 2, I'm putting my son for some coaching class or something, spending every year 2-3 lakh rupee. We don't know when he's graduating, whether he will graduate, we want to go for engineering. After engineering, he will go for employment. Whether he will get employment or not, we don't know. Everything is subject to market risk. Investing in gold, investing in equity, or investing in any product subject to market risk. Mutual fund and equity is also subject to market risk. But one thing I wanted to tell you, if you see the risk element, land is having the highest risk element. No liquidity risk. It is a liquidity risk is there. Market risk is there. Encroachment risk is there. Title risk is there. But in capital market product, you have market risk, especially mutual funds, just only market risk. Other than that, I don't see any other risk in the mutual funds. So I strongly suggest you, somebody invested, like for example, ICICI long-term equity or HDFC tax saver or Franklin tax shield, which is having a very good track record of 20-25 years. Somebody invested 25 years, 25 lakh, 1 lakh rupee every year. The system shows in 20 years, 1.5 crore. If I show you Franklin blue chip or HDFC top 100, 25 years, 25 lakh, today which is worth 4 crores. Franklin blue chip is 5 crore. If the mid cap is 7 crore, Franklin mid cap, that is a prima fund, which is 7 crore in 25 years. So that is what it delivered. Suppose many of us, we love to invest in insurance. After 25 years, our endowment policy will double. 25 lakh will become 50 lakhs you get at the time of maturity. If you put it in public provident fund, you may get 3 times. 25 lakh will become 75 lakhs. So if you invested in gold, much higher than that. If you invested in real estate, apartment, which is less than the gold return, which is the research. I have the backtesting research. Apartment delivered lower than the gold. That's very important. So invest where you feel comfortable. That is very, very important. And normally I share, I told you, whatever the wastages you save, you will grow bigger. I showed to those who are at 26, 29 years old, I show them every time they change the telephone for 1 lakh rupee, 80,000 rupee. I tell them hold the telephone for 5 years, don't buy the telephone, because Reserve Bank, when I take the lecture for faculty there as a induction program, they buy the phone every year. I tell them at least 4 years you don't buy. You save that money, that will be 3 crore when you are becoming 60 age. When you achieve 60, that time your asset will be 3 crore. Assume invest in small cap or mid, because it's expense end of the day. You invest in a highest risk where you see the magic. Only one telephone for 4 years if you don't buy. This is the magic what we get. Avoiding wastages, we become a crorepati. And Mr. Late and Mr. Early, somebody started at early at 25, accumulation period 35 years, invested 25 lakhs, it becomes 33 crores. And similarly, Mr. Late started at the age of 35, he was there for only 25 years, it is only 8 crore. Somebody cannot put the lump sum if they're starting as a SIP investment, 1 lakh per year, 35 years, it becomes 10 crore. Somebody starts after 10 years, which is only 2 crore. So those who are starting early, they will get the best. Only thing, even sometimes I tell them to start early. I will tell you, invest only for 10 years. You invest for 10 years, assume you are investing 5 lakh per annum. Suppose somebody is getting 10, 12 lakh rupee, save only for 10 years for your retirement. Put 1 lakh in PF, 1 lakh in FD, 50,000 in gold, 2 lakh 50,000 equity mutual fund. Assume equity gives you 15%, gold gives you 11%, FD gives you 7%, PF gives you 7%. After 10 years, your 5 lakh, 10 years will become 96 lakhs. After 25 years, without any other additional investments, which becomes 20 crore. But somebody starts early. Normally, I trust this one. The aggressively save for some specific period and allow it to grow. But only thing, we will not allow it to grow for a longer duration. We tend to see that very regularly. So if any emergency, we touch this only. We don't buy or sell any other asset class. That is where the problem happens. If you see, I showed you that, assume you're putting a RD, if it gives you 6%, it takes 25 years to double. You invested 30 lakh rupee, you are putting 10,000 every month. After 25 years, it becomes 67 lakhs. If you invested in equity, like if you invested in gold, it become 1.2. Gold delivered more than 10% in 25 years, 10 to 11% it delivered. If you invested in equity, which delivered more than 15%, which become 2.75 crore. Have the asset allocation, which is very, very important. The reason being, we don't create wealth, we don't have the faith. If we don't have the faith, automatically we know we don't create wealth in any asset class, whether it is a land or gold or anything. And this already disclosed about the number of income tax filers. We are around 5.9 crores assessment year 21-22. And this is the huge opportunity for us, for you, and also for me. About 20 lakh, can you see these individual numbers? Only 15 lakh people having about 20 lakh. This is where, I feel at least we become 4 times. I strongly believe in next 10-15 years, we become at least 4 times. Instead of 15 lakh, it could be 60 lakh crore. This is the published data by the Income Tax Department in 2017-18 financial year. Today, it could be, 25 lakhs in 3 years. But I feel at least we could be somewhere, 60 to 80 lakh people will be here, which is when I see every professional good should get, about 20 lakh, whether you are doctor or anyone in the system working with 20 years plus, they should be getting much more than 20 lakh. But the number shows very, very less here. Reason being, you are aware of it. So we have to bring into this lab. So India will grow, we will also grow. I was talking about the opportunity. After this presentation, I want to take you to some other thing where the growth and all. Through the Excel sheet, I will show that one also. I will complete this, I will go there. So I was mentioning to the madam that, the opportunity what is available in the mutual fund industry as a distributor. We are mutual fund distributors, and we work only on the word of mouth. We don't do any cold call marketing, nothing. Somebody refers, we try to, when I started, I said minimum 1 crore, and then I said 2 crore. For the last few years, I say minimum 5 crore. But whoever walks in, we say, any 10,000 rupees also we accept. But if you see how many people above 250 crores AUM, AUM means asset under management, in 2022, below 500. So for example, Sri Krishna Capital is in this range. We are about 250 crore in top 500 category. We are in India. So huge opportunity. If you see how many people there, ARNs, they say 1,83,000. Out of 1,83,000, if you see the active means, every day, every week, one application, hardly 20,000 ARN holders giving every week one application. So that is the number. But industry needs at least we need somewhere 3 to 4 lakh numbers we need, so that everybody will get the liberation, financial liberation. Everybody can help our people to financially freedom. That's very, very important. So if anybody interested, you can tell me. I can help in this also. You can become a distributor directly. You can take the ARN code also. And what is the challenges? What is the advantages? I will tell you personally. One-on-one basis, I can tell you. But I really suggest you can also create wealth. You can help others to create wealth. And before getting in further, I want to go to some other thing. I will come back here. Is it visible, this Excel sheet? Hello? Hello?
No, it's not visible, sir.
It's not visible.
Not visible.
Yes.
Is it visible now?
Yeah.
So in 1990 or 93, getting 5,000 or 6,000 rupees per month for a chartered accountant at the age of 25, which is very cumbersome. I know that people used to get 3,000 or 4,000, 5,000. Assume somebody got 72,000 per year in 1990 as a chartered accountant. After 30 years, assume they are getting 2 lakh, 2.5 lakh per annum. Today they may get 28 lakh rupee as annual income. Is this number is reasonable? Hello?
Yes.
Or I'm putting 28 lakh is lesser?
No, sir, it's reasonable.
Which is reasonable. After 30 years of experience as a chartered accountant, will they get around 25, 30 lakhs?
No, they should be getting much more.
Yeah.
Much more. So I can put 14%. Is it 14% is okay? Less than this or more than this?
30 years of experience for a chartered accountant who, if he's in employment, he should be getting anything above 60 lakhs or 70 lakhs, a minimum.
Okay, okay, fine. So I put 16% is growing. Assume 16% is growing at 60 lakh rupee. Is it okay now?
Yeah.
So he started at 72,000 his career, and he's saving 15% of his income is saving. Expected saving is 15%. Out of 72, he is saving 15%. That is, first year he is saving only 10,800 rupees. So every year he is increasing by 16%. The same way is also increasing. His salary is increasing 16%. His saving is also increasing. Second year income is 83,000. He is saving 12,000. So similarly, after 2020, after 30 years of experience, he should have at least, like 2020, you can see here, in 2020, he is supposed to have minimally 2.5 crore. It is only the now here there is no land or something. It's only 15% saving only I took. That 15% itself supposed to be 2.5 crore. Now, for example, now could be 3 crores. In 2020, 2.5 crore, now could be 3 crore. So whether we are having that much income, financial asset in our portfolio, that is number one question. Because industry delivered 14%. Industry actually, if you see Sensex, somebody invested only in Sensex, it delivered 16%. I put only 15% here. So even if it is put 15%, only index only they invested, not in the any other product. Just invested in the index. Index gave you 15% in 2020, which is 3 crores. So how many of us are having this return? Like by saving out of my 100 rupee, I saved only 15 every year, my income, whether I make financially liberated when I'm retiring now. It is very important. Suppose if somebody believes in the market, believes like, somebody like, Damani or Rakesh Junjunwala or something, instead of putting 100%, he started to save 20%. Instead of 15%, he's saving only 20%. Then he should have in the index, by investing in index 220, he should have approximately 4 crores. In case if we don't have that one, we did not save properly. That's what I will tell you. We are saving, but maybe putting an insurance. I took only out of 120 only. 80, I gave it for expenses, house and all those things, 20% saving. So assume in future, for example, somebody today at 2022, the age is, for example, 25. Today, the average pay could be 7 lakh. Hello, can I put 7 lakh today annum?
7 lakh per annum.
The young chartered accountants.
Yeah. Yes.
Okay, I put 7 lakh rupee. Assume I will keep the same earnings ratio. After 30 years, income will be 6 crores. Can we believe? But this is what happened in last 30 years. 70,000 become 60 lakh. Now we say 7 lakh may become 6 crore at 16%. Even somebody saves only 15% of that 6 lakh or 7 lakh rupee, he should have in 2052, he should have somewhere 28 crores. Is it possible? Yes, it is possible. Assume somebody invested in some selected mutual fund schemes, maybe 10 schemes, putting 10% each. In last 30 years, it delivered 18% or 20% return. If you actually put that return 18%, it's supposed to be, the numbers will be entirely different from 20 to 40. So this is what industry delivered. Are we part of this? Many of us, if we see many occasions, we miss the trust, we miss the faith, we don't have the faith, we don't invest at all. That is where the problem comes. We will exit also. We invested market, maybe I invested 10 lakh rupee, 10 lakh becomes 12 lakh. I'm very happy, excited. 10 lakh become 8 lakh, painful. Market is like, investing in market is investing in apartment. Somebody bought an apartment in Valacheri in 2014. What happened? 14-15 flood came. Maybe I invested 1 crore for Valacheri apartment, but in 2015 flood came. Nobody will buy, even if you are giving a 50% discount. The same thing happened in Bhuj. When earthquake came in Bhuj, people are not ready to buy at 5% of the value because earthquake came. That tsunami came in Besanagar. Nobody is interested to invest in 2004 and 5 because of the tsunami. The property price was 30-25 lakhs. Nobody interested to pay even 15 lakh rupee for a Besanagar property. Tsunami will come, flood will come, it will go away. But end of the day, we have to stay invested in a quality asset to create the wealth. And one more thing I wanted to show you, which will be helpful. Because many people, they believe in the apartment. Again, what I'm showing here is a real, whatever I showed there is expectation of the future growth, and what I'm going to show is the real. Can you see this Excel sheet?
Yeah, it is the old one.
Is it the same old Excel sheet you see? Okay,
Yes.
1 minute. Can you see this now?
Yeah.
Yes, sir.
So here, for example, you take T Nagar or Anna Nagar or Besan Nagar or anywhere Aryapuram. Assume, for example, somebody bought in 1995. For example, at 1,000 square feet, they paid 2,000 rupees per square feet in 1996. And today, if they sell after 25 years, they may get 12,000 or 11,000. And what they made XIRR is 7.7%. That is what compounded annualized growth rate. Assume your rental yield is 3%. It is not 3%, much less than 3%. Even if you put 3% expenses and maintenance 0.5%, you get 2.5% as the real rental yield before taxes. So assume you invested 20 lakh rupee in 95 and you are getting rental 50,000 first year, which is like 2.5%. And every year it is inflated as per the same 7.7 yield. Whatever my real estate price is growing, my rent is also growing. Same thing we did. Assume recently I got 3 lakh rupee or 2.8 as my rental income on a property value of 1 crore. 1 crore means roughly I have in T Nagar today maybe 800 square feet. I can buy the old apartment or 700 square feet. 700 square feet into 20 rupees, which is only 1.4. So, which is like, if you see 2019, which is 2.7 is the rental income. So I invested 20 lakh rupee as an additional property I bought for rental income. I'm getting every year 50,000, 53,000, 58,000 as a rental income I received. And net return, if I can sell for 1.2 crore, my income will be 10.2%. This is in real terms, which is not 1.2 crore, much less than that only, maybe 1.1 crore. Assume the same thing if I invested in the, I know real estate is high risk, mutual fund is also high risk, land is also high risk. Suppose somebody invested in, for example, ICICI multi-cap, which is having a track record, and invested same 20 lakh rupee. That point of time, the NAV was 6.7. I got 2.9 lakh units. I'm selling every year to get the rental income similar to that. I sold for 50,000. I sold 7,418. I sold and I got 17% yield. The current value as of 2019, this value is not today. I took the 2019 numbers, NAV dated 2019. That time it is 470, 299. The value 6.8 crores. Suppose if I see the Franklin Blue Chip, which is also there since 93, if I invested in the Franklin Blue Chip 20 lakh rupee, and I want rental income, similarly, I'm taking every year the 2.5% out of it. And here the yield is 20.2%, which is 13 crore, which is no way comparable with any other asset class. Today, NAV, which is much more than 650. If I put what is the value today, which is much more than 650, which is 18 crores. And the same period, if you see the mid cap, which is a blue chip is a large cap, and multi cap is 50% large cap, 25 each in small and mid cap. Somebody invested in Nippon Growth Fund, which was a Reliance Growth Fund. We were talking about leveraging that company, Reliance Communication, the same group of companies, Anil Ambani's. That time it was 2019, we were 1,145. And today it is 2,100 or 2,000. If you put that number, which is coming to 36 crores, no way comparable. So after seeing this, doing the back testing again and again, whether really I wanted to have first flat, okay, for living, second, third, fourth, fifth flat, will I grow? The answer is, as far as my knowledge is concerned, no. Even the mutual fund is much safer, highly liquid in nature. Even I bought a property in Nadia, and the market value, the new flat is nearly 18 or 20,000 rupees. I paid for 30-year-old flat around approximately 8,500. So which is reality. So what I want to tell you, if you want to buy a property, if you know you are going to live in that particular space for longer duration, then you buy. If you feel you will not live there, you live for only, job is changing every 5-10 years, don't buy. Stay on rental, but parallelly invest where you can beat the inflation, maybe in hybrid schemes or equity schemes, then you are benefited. I took the same situation for 2003 to 2019. This is 95 to 2019. I took the similar study because 95 to 2003 real estate prices almost no movement. If I invested in 2003, what will happen in the mutual funds? So that time I took just 3,000 rupees because in 2008 it moved up 10,000 rupees. 2009 versus 2019 real estate zero return. But 2003 to 2019, 3,000 become 12,000. They got 9% instead of 7.7. Here, they got 12% instead of 10%. But the same I plotted into the same mutual funds like large cap and mid cap. If you see the I want to show the same fund which I was showing. So that I did for testing for everything. Instead of 1.2, there is 2.1 crore. With 470, the current NAV is 650, which is like 2.9 crores. Again, even if 2003 versus 19 also, we are getting better return than the apartment. I compared even 2009 versus 19, but definitely at that time, markets also like, higher. When real estate also went up, like 10,000 rupees today could be 12,000 rupees. They got 1.8% versus 7.7 for 25 years. Here, they got only 5% return, but the same period in the Franklin Blue Chip, again, they made much higher than the mutual fund. If I plug that 650 rupees NAV as of recent NAV, which is 2.8 crore, which is still much higher. So different parts also I compared, still mutual funds giving better return. That is also the reason to suggest you this one. And additionally, one more thing, 1 minute. I want to stop after 3 minutes and I'll open for Q&A and we can close it. And again, I will show you another, the best. Can you see this
Yes, sir.
PDF?
Yes, sir, we can see.
Okay, here actually again, it is like a systematic investment return only, but instead of monthly, I did the calculation for yearly for the benefit year. So here I calculated the value as on 31st December 2021. Suppose somebody selected HDFC top 100. It's again information education only, no recommendation to buy, sell or hold, just information. So 25 years they invested 1 lakh, 25 years. In insurance, the endowment policy will become 50 lakh. In public provident fund will become 75 lakhs. But here it become 4 crore. 25 lakh become 4 crore. In HDFC top 100, Franklin Blue Chip become 5 crores, which is a large cap. If we see last 10 years, if somebody invested 1 lakh rupee for 10 years, that 10 lakh you can see most of the funds delivered 20 times. Just I highlighted. Can you see everything? Every fund, 10 lakh, 1 lakh investment every year become 23 lakh, 25, 24, 19. Assume today market is correcting 20%. So 20 minus 4 lakh, still 16 lakh. Again, no way comparable with other asset classes. If it comes to the mid cap mutual funds, like, Franklin Prima Fund, 25 has become 7.8 crore, whereas the Nippon Growth Fund, 25 lakhs become 9.3 crore. Even you take last 10-year return, you can see which delivered higher than the large cap because of more risk in the mid cap. Mid cap means, top 100 companies are large cap companies. The next 150 companies are the mid cap companies. Later, post 250, everything small cap companies. So here it is everything 20, 23, 24. Here everything is 28, 33, 28 because of the mid cap companies. So mid cap will give you more return because of the taking more risk. That's the main reason. So the information what I want to share it with you, stay invested. Before investing, do your own homework, get the conviction, and then we have to invest. I will go back to the presentation and then only a few more sheets. So it doesn't matter how much we have the resources, only we should able to use them. Very, very important. If we can try to use the resources, what is available within us, we will be making much different. Even most of the papers, when my childhood, I cannot buy newspaper, unable to buy. I cannot means unable to buy. I used to go to the corporation library to learn English because I was very poor in English. So in India, the biggest problem, what our generations, a generation before, and somebody has money, they are successful. Someone can speak in English, they are educated. So that is a very wrong way, we inculcated, which is happened to be very totally wrong. But definitely it helped us to grow. Definitely it is, yes, but language is only the communication for nothing else. And be optimistic. Have the people surrounding you are highly optimism, and ignore the negativism, ignore those who are talking nonsense, and without any numbers they speak about ill about the others, ill about our own country, ill about our own colleagues, ill about our own friends. Just ignore them. Stay with the people, those who are really optimistic and future oriented. So automatically what will happen, and we grow, and we try to grow our neighboring also, and which will help us, once we started to see not only you grow in front of you, your other person is also growing, we will be happy. If we see the child at the age of 4th standard, 9 years, for optimism she put only one face, and the pessimism she put 3 faces. That's what happens in the system. Many people are very pessimist, and because of that, even investment or education, if you ask them which one to study, if you say someone, I want to do CA, I want to do doctor, and they will give you a number of their opinion. most of the time it will discourage us. So stay with the optimistic people. So definitely you will grow. And if wealth is lost, nothing is lost. If health is lost, something is lost. If character is lost, everything is lost. If we see now, the politicians are doing, some politicians or many politicians are doing bad things. It is not their problem. It is our public problem. We are protecting them. It is that time has come. We have to, do our duty ethically to save our country. Very important, and not to waste food also, because wasting the food is, injustice. I know personally, I have to buy half a kilo rice to eat. That was the situation. God is very kind. Always He is giving me, always. So our path is complex. It is very complex, and we should have some discipline and to be happy. Only thing happy, I will say, not to create wealth or something. Discipline is very, very important. Discipline is, I'm not telling, doing yoga, doing anything, do whatever we like, in a limited way. So automatically we will be disciplined. So once we are disciplined, we grow, and we will make others also to grow. And madam is sleeping, milkman is coming, and cat is asking the milk, whether to give the milk to the cat, which is very important. So world is chasing for the ethical people. Talent is plenty, but the demand for the quality is very high. Ethical people are high. They will chase the ethical people. Like, you are in the industry where, if the trust is broken, they will not come back to us. We have to maintain the trust. So that will take us a very long way. We will grow exponentially if we have knowledge and ethical. Like HDFC and ICICI, all these banks, all are foreign controlled Indian bank. If you see Alphabet, Microsoft, and Google, Apple, 3 companies much bigger than India. Like Kotak Bank is much bigger than all public sector bank minus SBI. If I say something, that's again very detailed discussion. We can have it separately. But Kotak Bank is much bigger than all public sector bank minus State Bank of India. Similarly, these 3 companies much bigger than India. 30% of these employees are Indians. If we gave the platform to them, one of these companies could have been in India, and we will also be the roadmap. And this is a final, small, short video, 50 seconds video. I will.
Yeah, these guys are early mornings, late nights, 24/7, 356. Sacrifice, one sacrifice. Because there are no weekends at school, no excuses. Every day is a chance to move forward, to overtake the enemy. The enemy is India, Australia, South Africa, or the West Indies. It's you. So I've always told you how to snooze works. When you feel like that, great how we follow you. Lead by example. Run a little further, lift a little heavier, relish the pain. Always remember, the moment you think you've made it, you're finished.
And thank you very much. And if any questions, 1 second, I will see the chat backs. If any questions, you can ask me, or you can post it.
I've already covered the questions now. Audience, if you have any question, you can unmute and ask.
Hi, good evening, sir. This is Shiva. Hello, sir. Can I
Okay,
proceed?
hello, yes.
Sir, you have mentioned that you are given. Madam, I can proceed?
Yeah, please go ahead.
Yeah, madam. Thank you, sir. It's nice presentation and very good insights and all. Like usually people will consider buying the big house and enjoying the house and all, but you have given the real insights how much it is costing in comparison with the wealth creation and all. And I just want one thing here. I usually go with like you are given the asset allocation, FDs, gold, and equities, mutual funds. But as I'm reaching to the close to 50 years old, and the returns point of view, you are given like mutual funds and equities are better than this FDs and gold. But safety wise, like FD, I'm getting the 5%, 5.5%, and I'm always sleeping. Even at the age of 50, I even don't earn 14%, 15%, and I'm not projecting for the 25 years, 30 years. But the 6% is comfortable, and I'm earning, and my money is growing at the rate of 6%, and it's matching with the like 4 to 6% of the inflation, and it's just above the inflation. How we have to think of, is it am I in the right direction, or
it's a very good question actually. You know, at the age of 50 or 60, so I take a lot of retirement program also.
Yeah.
That point of the same questions they try to ask me. I studied one financial behavior program in IIM Ahmedabad. I was thinking at the age of 60 we have to go very conservative. And they told me like 60 to 85 or 60 to 80, 20 years is a very long duration. Even life expectancy is 85. So 60 to 85 is 25 is long duration. Maybe if you can invest what you need for 10 years, like 60 to 70 in a conservative product, maybe bonds or a fixed income product, the balance you can have somewhere, you know, where you can get higher yield. Because again, market every time its cycle will come, you will get better return. Somebody invested in equity mutual funds, even 10 years, they made much better than the bank FD return. Yes, there is subject to market risk. But I was sharing one slide, like, you know, tax efficiency. I was talking about, you know, bond fund versus fixed deposits. So I want to, I want to share with you 1 minute so that, you know, everybody will get some idea. Just I'm typing here SBI banking and PSU fund.
Okay.
And just I will take that value research. Just for any schemes, you can see the same thing. Just I will select this SBI banking and PSU for education purpose, which is 100% bond fund. It is not equity fund.
Oh, okay.
Can you see this? Ignore this rating. 1 year return is 1.42. Can you see this 1.42 1 year return?
Yeah. Yes.
And rating and all ignore. Don't chase 5-star rating. Definitely you will not make reasonable return. Very, very important. Just I will go down here. You can see here the risk appetite and all. They say low to moderate risk. Suppose if I ask you one question, whether SBI bank FD is safer or this is safer as per your knowledge. If I'm asking you SBI banking and PSU fund is safer or SBI is safer, which is that? Answer
SBI against SBI.
Fixed deposit you will give. Assume you are having 1 crore deposit. Will you put the money into Yes Bank or SBI?
SBI.
SBI. Assume, for example, another option, RBI is also giving you 6% for 7 years. SBI is also giving 6% for 7 years. Whether you will put it into RBI or SBI?
It's like tie and all, but SBI is as a bank, and it's
I
also
understand.
like
What I want to say
RBI, I prefer to the RBI.
RBI. So how we perceive actually, that's very important. So if we go to the SBI banking and PSU fund, we feel government of India is safer. We invest in RBI bond. As an emerging economy, India, from outside India, maybe from US or in Europe, we say it is emerging economy, highly riskier. They will pull it out, put the money. So they say America now increased rate. Actually, Fed is increased the rate. People are moving to it. That's the reason you can see the rupee versus $81. So it is increasing because people are buying dollar in India. Dollar is becoming expensive. Rupee is depreciated. So we will come back to the same topic here. I want to go and check what they are holding here. SBI banking and PSU fund, and ignore the comparison, everything. I ignore because it keeps changing dynamic actually. And we see what they are holding in this fund. It's coming. It is asking me to sign in. Can you see this portfolio, sir?
Yes.
What they are holding? They are holding Government of India 11.1%, certificate of deposits, that is the bank's CDs 8.2%, and NCDs and bonds 65%, which is mostly the public sector. And they will give the detailed also. The R&D asset holding, ONGC, Bank of Baroda, HDFC Bank, National Thermal Corporation, Axis Bank, Government of India, Indian Railways. These are all are, you can see the ratings, everything here. The message, what I want to tell you, assume for example, out of this, something is collapsing, some bank is collapsing here. What we are going to lose is 0.5% or 1%, what they are holding. Rest out of 1 crore rupee, maybe 1% will be 1 lakh rupee. Assume I invested in DHFL 1 crore rupee. If I invested in credit risk fund, maybe credit risk fund DHFL could be 3% or 2%. I lost only the rest, everything is saved. Like people are talking about Franklin Templeton, everything is lost because media is like that. Normally, negative information thrown and balked a lot. But end of the reality is totally different. So because of this, it is well diversified. If I keep the deposit in a bank, 1 crore or 2 crore, only 5 lakh is insured. Only 5 lakh is insured. Rest everything unsecured. Like what happened in 2007-8 crisis in US, many banks collapsed. We don't know what will happen tomorrow. Nobody knows. If one day 10-15 banks are collapsing, then nobody can save. Only one bank's problem, OBC, Global Trust took Global Trust problem, OBC took actually. Yes Bank actually they solved the problem. Similarly, Lakshmi Vilas Bank shareholder loss, still deposit holder. Okay, if happens 5-10 banks in one day, it is very difficult for anyone to safeguard. So then only 5 lakh is saved. So because of that, I suggest them to keep it in a banking and PSU fund instead of a single bank, like corporate bond fund instead of keeping in a single, like, any finance company. So when single finance company, maybe you get 0.5% more, but the risk is single company risk. The DHFL, everybody knows the finest company that is evaporated. So my suggestion, if you are happy with 6% return, even 4% inflation, this will give better return. If you see the historical return also, last 10 years, it delivered more than 7.5% return. Last 10 years, the bank delivered only 5.75% return.
Thank you, sir.
Am I answered your question, sir?
Yes, sir. Yes.
Some 20-30% into the equity for beating the inflation. That's it.
Sure.
I think there is one question in the Q&A.
Which debt fund to buy when market is bearish? No, this market, it is a market means it is an overall market. Debt fund mostly goes with the interest rate cycle. Suppose if the interest rates now it is going higher after the repo, we were increased from 5 point of we were increased 40 basis points increase. Again, we increased. Okay, when it is interest rates are going higher, buy the bond fund which is having the lower duration. That means they redeploy that money again, so they get higher rate. When interest rates are falling, for example, our bank deposits we are getting 8%. We know the interest rates are going to fall. So that point of time, invest in long duration fund like a medium term fund or income fund, where when interest rates are falling, bond prices will go up, you get better return. But as of now, with current situation, I suggest you to go to a lower duration fund instead of the higher duration fund, because I expect some more rate cuts, rate rise in future in next 12 to 18 months.
There's a
There
question
is in the Q&A, sir.
Okay.
not in chat box, in Q&A.
There is another question. Do you think market will go down further from current 17,000 level? If you go to, nobody can say, it will come down or go down. Now the sentiment, suddenly bearish and bullish. So because, because of that, market will correct here and there. Nobody can say, if I say 5% market will correct, 10% market will correct, and I'm giving my own view. Just don't get into any independent view for anyone. Think for the long term. Long term means, for example, today we are trading at 20 PE. If you see historical PE, when I was in Gulf, that time they say for emerging economy, forward PE, we say next 3 years forward PE, we said 16 means very good. That time Hong Kong, US and all trading at 12 PE, India, they are getting 16 PE. But historically, we are trading at 20 PE for the last 10 years, and anything below 20 PE, if you see the average of history, which is good to get in. But only thing what we have to decide, how much we have to invest. Maybe market corrects 10%, you buy something. Market corrects 20%, buy maybe 50%. Market corrects more than 30%, buy everything. What you want to target for next 10 years. But here nobody can tell you, market will go. But people will come and media, they will say, it is very difficult to tell. But I feel the sentiment is really little bit bearish now. Better to be cautious for the short term. And which debt fund I answered?
You can see that question answers. Last one.
So it's another excellent question. It's good to go with the direct mutual funds rather than regular funds to save the expense ratio. I strongly suggest you, especially 2020, which is giving us the exceptional information, COVID. First thing is we need somebody like I can file on my own. Whether will I file on my own or I will go through the auditor? Yes, I will go through only through auditor, even if I know to file income tax return, because we need someone to help us. At least if I do something wrong, the small mistake will cost us a lot. Assume, for example, direct platform was a regular platform. Assume you have the exceptional knowledge. You can buy on your own. You can buy directly the schemes. If any emergency, who is going to help you? If somebody is the family member will help you, yes, direct platform is the best thing. Assume we don't know to pick which scheme, and you need to manage your emotions. You need to manage your behavior. So you need someone who is having the industry specialist. And also at the time of any emergency, that person should work for your welfare. That person you should keep. What is the difference between direct and regular plan? Assume regular plan expense ratio is 2%. Direct could be 1.2 or 1.3. What you're going to save is 0.6 or 0.8. But 0.8, I will not suggest you to go for a direct plan, not because I'm a mutual fund distributor. If you are getting any value addition, maybe one time in 20 years or 15 years, if the person can give you buy now, exit now, that will give you more than what you saved through the direct versus regular platform. Very, very important. Yes, if you are having good knowledge and somebody is there to help you at the time of any emergency, direct option is the best. Even somebody is having a 50 crore asset, I will tell them to keep someone to help you. That's what I will do. And all these online portal, everything is very good. And for example, you can buy insurance. For example, small example, our own experience from the investor and myself, getting the insurance is very easier. When the claim comes, how many of you are not facing the problem? Whether the claim is settled quickly or we gone through the hardship. So if we can put that experience here, whether to go for the tech platform directly or to invest through someone known to us for a long term, will help for us. That's very important. Based on that, you can take the call and is worth the direct. Okay. Am I answered your questions?
Yes, yes, sir. Let me go with.
Madam, not audible, madam.
Yeah. So thank you, sir. Thanks a lot. I think the questions which we asked were also very thought-provoking, and your presentation was fabulous. I suppose that you have convinced us that as far as we are concerned, even though wealth does not play a very huge role in our lives, we need to have a certain fallback in terms of wealth to remain calm and happy throughout our lives. And you told us the importance of balancing the health quotient and the wealth quotient. And also you've told us the moment you believe, the possibilities are unlimited for us. They become unlimited, like the small clip which you showed, video clip, where the moment you start sleeping, then you don't know what happens. So similar to that, the moment you believe in yourself, you believe in the power of compounding, which is, I think, what your basic strong point running throughout your presentation, the power of compounding, which we have to believe in, and believe in also like how you told us in the last part of your presentation, you would trust a chartered accountant, and hence we should also learn to trust the other experts in the field. You have delivered that so well, sir. Thank you so much for taking the time off and sharing your experience with us. We are extremely grateful to you, and on behalf of SIRC and all the participants here, a very big thank you to you. Thanks a lot.
Thank you, ma'am. Thank you very much for the opportunity given. Thank you.
Thank
And
you.
best wishes.
Thank you. Thank you very much.
Happy Dashra.
Thank you.
Yes, same to you, sir.